Welcome back, everyone. Today, we're dissecting the latest numbers from a prominent name in the chemical space, Deepak Nitrite Limited. This is always an interesting one to watch, given their diverse portfolio.
Absolutely. Deepak Nitrite is a major player, primarily involved in advanced intermediates and phenolics. They've got a lineup of key subsidiaries like Deepak Phenolics Limited, Deepak Chemtech Limited, and even an international arm, Deepak Nitrite Corporation Inc. in the USA. They also have Deepak Oman Industries LLC, Deepak Advanced Materials, and Narmada Thermal Power Private Limited. So quite a spread.
Indeed. So, they've released their audited financial results for the quarter and the full financial year ended March 31st, 2025. The Board of Directors approved these results on May 28th, 2025. We'll be looking at both their standalone and consolidated performance. Let's kick things off with the headline numbers, revenue and profits. How did they fare in the fourth quarter and for the full year?
All right, let's break it down. We'll start with the standalone financials for Deepak Nitrite. For the fourth quarter of fiscal year 25, Q4 FY25, ended March 31st, 2025, revenue from operations stood at 654.47 crore rupees. Comparing this year-over-year, YOY to Q4 FY24's 671.15 crore rupees, that's a slight dip of about 2.48%. Quarter-over-quarter, QOQ, however, it's a significant jump from Q3 FY25's 551.59 crore rupees, up by roughly 18.65%, so a strong sequential recovery.
Okay, a mixed bag on standalone revenue for the quarter. Down year over year, but up sharply quarter over quarter. What about the full year picture for standalone revenue?
For the full financial year FY25, standalone revenue from operations was 2,526.47 crore rupees. This is down from 2,724.35 crore rupees in FY24, a decrease of about 7.26%. So the annual trend mirrors the quarterly year-over-year dip.
Got it. Now let's switch to the consolidated financials. How does the picture change when we include the subsidiaries, especially for revenue in Q4 and for FY25?
Right, moving to the consolidated numbers. For Q4 FY25, revenue from operations was 2,179.69 crore rupees. Year over year, this is up from 2,126.21 crore rupees in Q4 FY24, an increase of about 2.51%. That's a turnaround from the standalone. Quarter over quarter, it's also a healthy increase from Q3 FY25's 1,903.40 crore rupees, up by about 14.51%.
That's interesting. Consolidated revenue up year over year for the quarter, while standalone was down. What's driving that? And what about the full year consolidated revenue?
That's a great question. And a key point here is other operating income or specific recognitions at the consolidated level. Note 4 in the report mentions that the consolidated revenue for Q4 FY25 includes a significant government incentive income of 161.18 crore rupees. For Q4 FY24, this incentive was much lower at 23.09 crore rupees. This incentive largely explains the year-over-year consolidated revenue growth in Q4. For the full financial year FY25, consolidated revenue from operations was 8,281.93 crore rupees, up from 7,681.83 crores in FY24. That's a growth of 7.81%. Again, the government incentive for the full year FY25 was 161.18 crore rupees compared to 38.47 crores in FY24, contributing significantly to this annual growth.
Wow, that government incentive is quite impactful on the consolidated top line. Thanks for highlighting that. Now, let's drill down into profitability. How does EBITDA look for both standalone and consolidated for Q4 and the full year? And can you give us those year-over-year and quarter-over-quarter comparisons?
Certainly. Let's calculate EBITDA. For standalone EBITDA, PBT plus finance costs plus depreciation. Q4 FY25, 96.71 crore rupees. Year over year, this is down significantly from 181.59 crore rupees in Q4 FY24. Q4 FY24 PBT included an exceptional income of 79.80 crore rupees from an insurance claim. If we adjust Q4 FY24 PBT for that, the comparable PBT would be 76.92, making adjusted EBITDA roughly 101.79 crore rupees. So even then, Q4 FY25's EBITDA is lower. Quarter over quarter, it's a strong recovery from 49.47 crores in Q3 FY25. FY25 full year, 441.19 crore rupees, down from 647.14 crores in FY24, or about 567.34 crores if we adjust FY24 for the exceptional item. For consolidated EBITDA, PBT plus finance costs plus depreciation, Q4 FY25, 339.30 crore rupees. Year over year, down from 400.06 crore rupees in Q4 FY24. Again, adjusting for the 79.80 crore rupees exceptional item in Q4 FY24 PBT, the comparable Q4 FY24 EBITDA would be around 320.26 crore rupees. So, Q4 FY25 EBITDA is slightly better than the adjusted Q4 24. Quarter over quarter, a significant improvement from 189.53 crore rupees in Q3 FY25. FY25 full year, 1,175.62 crore rupees, down from 1,279.21 crore rupees in FY24, or about 1,199.41 crores adjusted for the exceptional item.
So, a complex picture for EBITDA with that exceptional item in the previous year. Generally, a tough year-over-year comparison for standalone, but a decent sequential recovery in Q4 for both. Consolidated Q4 EBITDA seems to have held up better year-over-year on an adjusted basis. What about profit before tax?
Let's look at PBT, considering the reported figures which include exceptional items where applicable. Standalone PBT, Q4 FY25, 70.34 crore rupees. Year over year, down from 156.72 crore rupees in Q4 FY24, which included that 79.80 crore exceptional income. Excluding that, Q4 FY24 PBT was 76.92 crore, so a bit lower. Quarter over quarter, a massive jump from 23.85 crore rupees in Q3 FY25. FY25 full year, 337.54 crore rupees compared to 558.26 crore rupees in FY24, which included that exceptional income. Consolidated PBT, Q4 FY25, 278.71 crore rupees. Year over year, down from 349.19 crore rupees in Q4 FY24. Again, this included that 79.80 crore exceptional income. Excluding that, Q4 FY24 PBT was 269.39 crore rupees. So, Q4 FY25 PBT is actually slightly up year over year. Quarter over quarter, more than doubled from 135.20 crore rupees in Q3 FY25. FY25 full year, 952.75 crore rupees, down from 1,101.72 crore rupees in FY24, which included that exceptional income. Okay. And carrying this down to profit after tax and earnings per share EPS.
Let's do that. Standalone PAT, Q4 FY25, 53.87 crore rupees. Year over year, down from 115.68 crore rupees in Q4 FY24. Quarter over quarter, up sharply from 17.25 crore rupees in Q3 FY25. FY25 full year, 276.43 crore rupees, down from 433.43 crore rupees in FY24. Standalone EPS for Q4 FY25, 3.95 rupees versus 8.48 rupees in Q4 FY24. Quarter over quarter, up from 1.26 rupees. Standalone EPS for FY25, 20.27 rupees versus 31.78 rupees in FY24. Consolidated PAT attributable to owners, Q4 FY25, 202.41 crore rupees. Year over year, down from 253.86 crore rupees in Q4 FY24. Quarter over quarter, up significantly from 98.09 crore rupees in Q3 FY25. FY25 full year, 697.24 crore rupees, down from 810.90 crore rupees in FY24. Consolidated EPS for Q4 FY25 14.84 rupees versus 18.61 rupees in Q4 FY24. Quarter over quarter up from 7.19 rupees. Consolidated EPS for FY25 51.12 rupees versus 59.45 rupees in FY24. Any significant other income we should be aware of that might be influencing these numbers, especially on a standalone basis?
Yes, good point. For standalone other income, Q4 FY25, 18.96 crore rupees, up from 17.36 crore rupees in Q4 FY24 and 7.68 crore rupees in Q3 FY25. For the full year FY25, standalone other income was quite high at 149.19 crore rupees. Note 2 explains this includes a dividend of 98 crore rupees received from its subsidiary Deepak Phenolics Limited and a profit of 13.04 crore rupees on assignment of leasehold rights also to Deepak Phenolics. This is a substantial internal transfer contributing to standalone other income. For consolidated other income, Q4 FY25, 22.79 crore rupees, up from 19.13 crore rupees year over year and 20.99 crore rupees quarter over quarter. For the full year FY25, it was 83.86 crore rupees, up from 76.10 crore rupees in FY24.
That standalone other income detail is very insightful. Now, stepping back, what are your thoughts on profitability margins, EBITDA margins or net profit margins, and how do they compare standalone versus consolidated?
Let's look at the margins. Standalone EBITDA margin, EBITDA divided by total income, Q4 FY25, around 14.36%. This is down from Q4 FY24's 26.37%, which was boosted by exceptional PBT. Sequentially, it's up from Q3 FY25's 8.85%. FY25 around 16.49%, down from FY24's 22.72%. Standalone net profit margin, PAT divided by total income, Q4 FY25 around 8.00%, down from 16.80% in Q4 FY24, up from 3.08% in Q3 FY25. Consolidated EBITDA margin, EBITDA divided by total income, Q4 FY25 around 15.40%. This is lower than Q4 FY 16.65%. Again, FY24 aided by exceptional PBT. Sequentially, a good improvement from Q3 FY25. FY25 around 14.05%, down from FY24's 16.49%. Consolidated net profit margin, PAT to owners divided by total income, Q4 FY25 around 9.19%, down from 11.83% in Q4 FY24, up from 5.10% in Q3 FY25. Generally, margins are lower year over year, partly due to the exceptional item in the base year, but also reflecting some operational pressures. However, Q4 FY25 showed a strong sequential margin improvement from Q3 FY25. Consolidated margins in Q4 FY25 are slightly better than standalone.
You mentioned the exceptional item from FY24, the insurance claim of 79.80 crore rupees. Its absence in FY25 makes the year-over-year comparison for profits look weaker, but suggests cleaner results for FY25, right?
Exactly. The FY25 numbers don't have that one-off boost, so they give a clearer picture of the underlying operational profitability for the current year, though we still have that significant government incentive on the consolidated revenue side in FY25.
Let's peek at the balance sheet. Any major changes in assets, liabilities or equity as of March 31st, 2025, comparing standalone and consolidated?
Looking at the statement of assets and liabilities as of March 31st, 2025, on the standalone side, total equity increased to 3,126.48 crore rupees from 2,954.54 crore rupees a year ago. Total liabilities also rose to 490.99 crore rupees from 416.47 crore rupees. Borrowings are minimal on a standalone basis, mainly current borrowings of 18.87 crore rupees. On the consolidated side, total equity attributable to owners increased to 5,388.67 crore rupees from 4,796.62 crore rupees. Total liabilities saw a substantial jump to 2,293.01 crore rupees from 1,273.54 crore rupees. A key driver here is non-current borrowings, which surged to 1,025.71 crore rupees from 216.95 crore rupees. Current borrowings are at 144.82 crore rupees. This indicates significant debt taken on at the consolidated level during the year.
That's a big jump in consolidated borrowings. What about cash flows for the full year FY25, primarily at the consolidated level? And did they announce any dividends?
For the consolidated cash flow for FY25, net cash generated from operating activities was 624.70 crore rupees, which is actually down from 874.06 crore rupees in FY24. Net cash used in investing activities increased significantly to 1,491.33 crore rupees outflow, compared to a 717.84 crore rupees outflow in FY24. This was mainly due to higher purchases of property, plant and equipment and investments. Net cash from financing activities showed a large inflow of 806.16 crore rupees, up from an inflow of 43.53 crore rupees in FY24. This is mainly driven by proceeds from long-term borrowings, which ties back to what we saw on the balance sheet. Overall, there was a net decrease in cash and cash equivalents by 60.47 crore rupees during FY25. Regarding dividends, yes, the board has recommended a dividend of 7.5 rupees per equity share of 2 rupees face value for the financial year ended March 31, 2025. This amounts to a total payout of 102.29 crore rupees subject to shareholder approval.
Okay, lower operating cash flow and higher debt, but a dividend recommendation. Now, a crucial part, segment performance. Deepak Nitrite operates mainly in advanced intermediates and phenolics. How did these segments fare in Q4 and for the full year on a consolidated basis?
This is where the story gets more nuanced. Let's look at the consolidated segment performance. Advanced Intermediate segment. Revenue from operations. Q4 FY25, 653.94 crore rupees. Year over year, this is down from 671.07 crore rupees. Quarter over quarter, it's up from 551.69 crore rupees. FY25 full year, 2,527.31 crore rupees, down from 2,723.88 crore rupees in FY24. PBIT, profit before interest and tax, Q4 FY25, 44.88 crore rupees. Year over year, this is significantly down from 133.90 crore rupees in Q4 FY24. Remember, Q4 FY24 PBIT for this segment included that 79.80 crore rupees insurance claim. Adjusting for that, Q4 FY24 PBIT was around 54.1 crore rupees. So, Q4 FY25 is still lower than the adjusted prior year. Quarter over quarter, it's a strong improvement from 16.86 crore rupees in Q3 FY25. FY25 full year, 175.70 crore rupees, a steep fall from 445.85 crore rupees in FY24, or about 366.05 crore rupees if adjusted for exceptional. Segment assets at end of FY25, 2,512.32 crore rupees, slightly down from FY24. Phenolics segment. Revenue from operations. Q4 FY25, 1,532.27 crore rupees. Year over year, up from 1,466.11 crore rupees. Quarter over quarter, also up from 1,365.74 crore rupees. FY25 full year, 5,805.10 crore rupees, a healthy increase from 5,003.45 crore rupees in FY24. PBIT, Q4 FY25, 239.33 crore rupees. Year over year, up from 206.13 crore rupees. Quarter over quarter, nearly doubled from 121.19 crore rupees. This segment is doing very well. FY25 full year, 782.96 crore rupees, up substantially from 643.92 crore rupees in FY24. Segment assets at end of FY25, 2,642.14 crore rupees, up from FY24. So, it's a tale of two segments. Phenolics is showing strong growth in revenue and profitability, both year-over-year and quarter-over-quarter, while Advanced Intermediates faced a tough year, though it saw a sequential recovery in Q4 profits.
That's a very clear divergence. Phenolics seems to be the star performer. So, summarizing the year-over-year performance for FY25, it looks like consolidated revenue grow, largely thanks to that government incentive and the Phenolics segment. But overall profitability, PAT, EPS declined, impacted by the advanced intermediate segment and the absence of last year's exceptional gain.
Precisely. The efficiency or cost management might have improved sequentially in Q4, but the full year picture for advanced intermediates pulled down the overall consolidated profit growth despite Phenolics' strong contribution.
Are there any other significant notes or events from the report that investors should be particularly mindful of?
We've covered the main ones: the dividend recommendation, the components of standalone other income, intercompany dividend and asset transfer profit, the details of the FY24 exceptional item, and the significant government incentive income in the consolidated revenue for FY25. The report also mentions that the figures for the last quarter are balancing figures between the audited full year figures and the published year-to-date figures up to the third quarter.
Now, a critical aspect, the auditor's report. Deloitte Haskins and Sells LLP are the auditors. What's their opinion on both the standalone and consolidated results? Any qualifications, emphasis of matter, or key audit matters we need to discuss?
Good news on this front. For the standalone financial results, the auditors have issued an unmodified opinion on the annual standalone financial results for the year ended March 31, 2025, stating they give a true and fair view. For the unaudited standalone financial results for the quarter ended March 31, 2025, they've provided an unmodified conclusion, stating nothing has come to their attention to suggest material misstatement or non-disclosure. For the consolidated financial results, similarly, an unmodified opinion on the annual consolidated financial results for the year ended March 31, 2025, and an unmodified conclusion for the unaudited consolidated financial results for the quarter ended March 31, 2025. There is an other matters paragraph in the consolidated audit report which is standard, stating that they did not audit the financial statements of 5 subsidiaries with total assets of about 248 crore rupees and total revenues of about 15.43 crore rupees for FY25. These were audited by other auditors, and Deloitte's opinion, insofar as it relates to these subsidiaries, is based solely on the reports of those other auditors. This is a common practice and not a qualification. So essentially, clean audit reports for both standalone and consolidated financials.
That's definitely reassuring to hear. So, putting it all together, the strong performance of Phenolics, the challenges in advanced intermediates, the impact of the government incentive, increased debt, and clean audit reports. What's the general outlook and what are the key risks?
The outlook appears mixed but with positive drivers. The Phenolics segment is clearly a powerhouse and its continued strong performance will be key. The sequential recovery in advanced intermediates in Q4 is a positive sign, but its sustained turnaround is crucial for overall profit growth. The company is investing, as seen from the increased debt and capex, which could fuel future growth, but also brings execution and integration risks. Key drivers would be sustained demand and pricing in the Phenolics segment, a successful revival of profitability in advanced intermediates, and effective utilization of the new debt for growth projects. Potential risks include volatility in raw material prices, cyclicality in the chemical industry, increased competition, any slowdown in end-user industries, and the successful management of their expanded debt profile. And, as always, this is just our analysis of the reported numbers. We strongly advise investors to conduct their own due diligence and consult with certified financial experts before making any investment decisions.
Excellent point. So, to conclude, Deepak Nitrite's FY25 was characterized by a standout performance from its Phenolics segment, which drove consolidated revenue growth, aided by a notable government incentive. However, the advanced intermediate segment faced headwinds, impacting overall profitability compared to the previous year, which also had a one-off exceptional gain. The company has taken on more debt, presumably for growth, and has recommended a dividend. The clean audit reports are a positive.
That sums it up well. The Q4 sequential improvement across segments is encouraging, but the market will be keenly watching if advanced intermediates can sustain this recovery and how effectively the new investments translate into future earnings, especially in the context of the higher debt.
A lot to track there. Thanks so much for that incredibly detailed breakdown of Deepak Nitrite's FY25 results.
My pleasure.
And thank you to our listeners for tuning in. We'll be back soon with more financial insights.